Hey guys, hey movers and shakers, welcome to another exciting episode of the Seven Figure Moving Academy. Today we are discussing gross income, gross profit, net profit, and profit margin. And we're going to hopefully, if I've done my job correctly, you'll be able to understand the differences and the similarities to each and how they all correlate one with each other. Therefore, making your business much more profitable, much more productive, and quite honestly, able to last longer and more efficiently. All right, guys, let's get into the video right now. Hey movers and shakers, so glad you're gonna be here for this video. We're talking about how to understand gross profit, net profit, and profit margin. I can't believe that there's this many people out there that don't understand these basic principles of profit. So we're going to discuss this here, right? So first of all, right, this applies across the boards, and there's going to be several different ways to calculate gross profit, net profit, and profit margin, but they all apply the same principle and they all apply the basic same formulas across the board. What you use to calculate it might be different in different verticals and industries. So I coming from the moving industry, so I'm going to use the example of a moving service, right? But this will apply to any business out there. So let's get into it. So the first thing we have is what we call the gross income, right? Gross income, that is the exact sale of the job. So in the moving industry, we sell a moving job, and that job could be $2,000, $3,000, $4,000, whatever it is. If it's a tax accountant, maybe it's the cost to do the taxes. So that could be a couple $100. If it's a chiropractor, it's the $100 for an adjustment. If it's a lawyer, maybe it's $500 an hour kind of thing. But the idea is that one particular service has this gross income. So what you do is this could be whatever it is. And I'm going to use the example of a moving industry. And I'm just going to just out there and say, this job is $1,000. All right, so it's 1K, $1,000. And that's just a hypothetical. It could be whatever. So I'm just trying to make the math easy. So if this job is $1,000, what is the gross profit? Well, you come over here, right? You come over here, and this is the gross profit. So this blue area, that's your gross profit. This area is cost of goods sold. That's your direct expenses. So in the example of a moving job, this would be your labor, so however many guys you use, and if you rented a truck, it could be whatever the truck costs. So out of $1,000, hypothetically, this is going to be $300, right? So the cost of goods is $300, or 30%, if you will. So, and this will be $700. So your gross profit from the gross income is $700. Are you catching me? Are you following me? Okay, good. So now then, how do we figure out net profit? Well, we're going to come over to this one right over here, and we're going to come up to net profit. So now we take the gross profit, and that's what all of this is. This is the gross profit. And then we have to minus out all the operating expenses. You got to minus out your taxes. You got to minus out your interest, right? And this is operating expenses. So that could be your marketing, that's your websites, that's, gas, fuel, rent, so on and so forth. Then you got your taxes. And then if you have any loans or anything, the interest on those loans, etc., or any interest on anything. These are your operating expenses, and you got to minus all that. And then what you have left over, that is your net profit. So out of this $700, the $600, that is all your operating expenses and your taxes. And then what you have left over is $100, right? So your net profit is $100. Okay, so now how do you figure out your profit margin? Well, your profit margin, in this case, follows this formula right here. It's net profit divided by revenue, which is your gross income. So you could also put gross income here. Right? So your net profit divided by your gross income equals your profit margin. So our gross income in this case is $1,000. Right? Our net profit is $100. So that equals, so it's a 10%. So your total is 0.10, right? Well, then you times it by 100, and then that's your percentage. So it's 10%. So in this case, your your profit margin is 10%, right? Your net profit is 100 and your gross profit is $1,000. Now there's a difference between net profit and profit margin. Although they come out with the same thing, your net profit is $100, right? But your profit margin is 10%. Now your profit margin is going to be determined by the net profit, obviously. But, right, you can increase your profit margin and still kind of, based on these numbers, not necessarily increase or decrease your gross revenue or your net profit. So now how does this correlate to your business? A lot of people don't understand what gross profit is. And if they are going to understand it, they're only going to understand this particular principle, right? But a lot of people confuse what cost of goods are versus all the other operating expenses, etc. are. So they kind of mix between what gross profit is and what net profit is. Okay? It's not that hard of a concept when you actually look at it here by the boards. You got your overall price. You got your gross profit is your gross income minus the cost of goods. So those are your direct expenses to produce or service that particular item. Then your net profit is the profit that is left over after you take out all the other expenses that are involved. And from your net profit, you're able then to get your profit margin. So how do you get your profit margin to higher? Well, you want to obviously reduce expenses. You want to find a way to reduce expenses. One of the biggest expenses is payroll, right? But the problem in reducing payroll is then you get less quality of people typically, and then that then goes into less quality of service or goods produced and provided. So so sometimes you got to make that trade-off, and that's where you got to know your different other KPIs, which is key performance indicators, right? You can reduce your taxes. And in a later video, we're going to go over corporate structure so that you can minimize your tax exposure. And this is the secret of the rich. And I'm going to give it to you now, a little bit of a spoiler for this video coming up very soon. Own nothing, control everything. Okay? Own nothing, control everything. That was actually by Rockefeller. He actually said that long ago. The richest man ever to be, when you add in all the other things, the richest man ever be on the planet was Rockefeller. And he basically used the government's tax structure to his benefit. He took what they wanted to make taxes, and he was able to manipulate and find the loopholes and find a way so that he could control everything without owning a damn thing. And we're going to go over that secret of the rich very soon. So you got to reduce your taxes, and obviously you got to reduce your interest. The way you reduce interest is you pay principal more than you pay interest. A lot of people with credit cards or loans, they pay the bare minimum. What they don't realize is there's when they do that, there's this shift, right? And it goes like this. So when you're paying off your loans, all you're doing is paying off interest until you get to this point. Then you're paying off your principal. So it's only the last 2/3 of the lifetime of your loan, right, that you're paying off principal more than you're paying off interest. So the first 2/3 of the life of your loan is you're paying off principal. So paying off interest rather. So what you got to do is you got to actually start paying off your principal more, and then it's going to look like that at the end. So that's how you can lower your interest, right? So there's definitely ways to do it. So we're going to go over here. So R equals revenue. That's your gross income. COGS means cost of consumer goods. E's are your operating expenses. I for interest. T for taxes. So if you want to increase your profit margin, you got to learn how to lower these expenses. All right, that's not an expense. This is not an expense. That's an income. But you got to, all these other things right here is you got to learn how to lower those in a way that's going to increase your revenue as well as increase your profit margin. All right. So understanding what profit margin is, net profit and gross profit is, and really understanding everything that goes into each one of those categories will really greatly improve your company's performance, increase its quality, and increase its longevity. So if you're finding that you're operating and you don't have enough cash flow and so on and so forth, maybe go back to the basics and learn the basics. Guys, I hope you learned something about this. I hope this was beneficial. I hope you were able to understand gross profit, net profit, and profit margin, and how they relate to one another and how they work and are different from one another as well. All right, guys, I like you. I love you. Go and do something great today.